Good day everyone, this is your European Open briefing for Friday, February 9th, and these are the key points you should be watching today. There was another round of risk-off as Wall Street was down around 4% yesterday, major Wall Street indices. There was some movement in foreign exchange, the yen, the pound, the euro, but no significant contagion yet from the equity sell-off. Congress missed the deadline for a stopgap measure for passing a stopgap measure to prevent a government shutdown, but this measure was passed early on Friday, so I guess the shutdown could be avoided. We will see, or have a very small shutdown, especially if the legislation is approved in the House of Representatives as well. And for the day ahead, we have a UK manufacturing output for December, so a bit late data, and Canadian employment numbers for January. There was a big drop in US stocks on Thursday. You see Dow Jones futures here falling from around near 25,000, falling all the way below 24,000, now recovering to above 24,000 again. This is signaling that volatility is still with us after the major drops we had in previous sessions. And major US indices are now 10% off their highs. This is significant because we haven't had such a big correction in years. On the other hand, safe havens are not gaining as much. We will talk a little bit about that in a second. And US 10-year yields around 2.85% are scaring investors relatively high. High bond yields means that it's an attractive alternative to stocks, means bonds are more attractive relative to stocks, and also that corporations' long-term financing costs are also rising. The US dollar index rose to around 90.5, now around 90.18. I think that it's safe to say that the dollar is benefiting particularly from euro weakness. The euro is having a tough week. It's trading around 122.81. It's down 1.5% on a weekly basis. The speculation in the market is that euro longs are exiting because of risk-off sentiment. They are closing down those bets. And the shutdown story is not so big right now. We have relatively high chances of resolution after the Senate has passed the legislation we talked about. The pound, on the other hand, is volatile. We had the Bank of England meeting yesterday together with the inflation report and the Mark Carney's press conference. He hinted at earlier and more rate hikes. Now, that was enough to get sterling traders excited. They pushed cable back above 1.4. Then it came back down in volatile trading. And the Deputy Governor Broadbent saw positive wage developments. And he added that a couple of hikes within a year would not be such a great shock. So maybe within with the horizon of the next 12 months, UK rates to rise from about 0.5 to 1%. Still, Brexit is the main story, I think, for the pound. The latest chatter has not been particularly positive. Of course, we have ups and downs in the Brexit process. We had a relatively positive period. The last few days have not been as positive. And I think the market is more or less discounting things going well with respect to Brexit, but that conclusion is not so obvious to a lot of observers, including myself, so we'll see about that. Now, dollar yen dipped to 108.5 on the risk-off sentiment on safe haven buying, but it gave back some of the losses, so dollar yen recovered to above 109. Risk markets have stabilized a little bit today. Other safe havens such as gold They are relatively low, around 1,314 per ounce. This suggests to me that there is no panic yet in the market, because if there was, then we would see safe havens and gold doing much better. Earlier today we had the Chinese inflation release. It came in softer. This was as expected. There's no real story there. I think 1.5% inflation in China is nothing to get excited about. It could be a little distorted by year-on-year comparisons. I think the lunar year change was late January last year. This year it's in the middle of February. And consumer inflation is the lowest since July. This could indicate on the one hand that the Chinese economy is slowing down a little bit, but on the other hand it could also be signaling that at least the consumer is not under such intense pressure. Also we see here producer prices coming in a little lower than expected in China. And for today we have UK manufacturing output expected to slow down a little bit to 0.3% month-on-month from 0.4% the previous month. The goods trade balance for the UK also to be watched. And employment change in Canada to slow to 10,000 from 78.6, and the unemployment rate to tick up to 5.8% from 5.7%. That's all from me today. Thank you very much for watching and have a great day.